Now I'm about to show you one of my most favorite strategies, and this is the trendline strategy. And ideally what this does is very simple. It tracks the trend. This market can only move in three directions: upwards, sideways, and downwards. And what we use this line for is to track the actual trend. Now, the reason why we're doing this is because when the market's moving in a solid direction, it likes to continue in that momentum or continue in that direction at the same sort of strength. And as soon as something changes, we start to lose momentum or something like that, you'll actually see that we start to break trend. And when we break trend, what it actually means is the market is now going to change what it's been doing previously. Either if the market's been moving up and we break a trend, maybe the market starts to go sideways or it starts to come down. This is what these lines are going to help you identify. Secondly, what it's going to do is it's going to give you structure on how to actually take trades. It's going to tell you that when we break a certain line, this is where we buy, this is where we put our stop loss, and this is where we're going to take profits. And that's the beautiful part of it, is that it actually gives you a whole structure behind your trades, so you know what to do when something actually happens. Now let me show you an example of how powerful these lines are, and then I'm going to get into three different strategies to help you with a long-term, medium-term, and short-term approach with the strategy. So if we jump onto our trading view, you could see over here that these lines are very similar, and we also use them as support and resistance. And what it basically means is the top line is resistance, it's our rooftop. So basically means we are tracking the momentum down, and as soon as that changes, it can give us an indication that the market is doing something different. Be prepared. And it's the same thing when we are going up as well, where we will use a support trend line, something that's showing us that this is the momentum we're holding. Don't lose it. As long as we hold this momentum, we're going up. But as soon as we lose that momentum, we change in direction. And have a look at the example that I've just shown you. Look, as soon as we've been holding this trend over here, as soon as we cracked it, look how we started to lose momentum. And it's the same with the resistance. Now, before I show you how this actually works and how to take trades with it, I just want to show you the power of these actual trend lines. In a bear market, where the market is moving down, your support trend lines are super important because they track when a really big move is coming. So you could see this previous one, look how much the market actually went down from there. And we actually measure that, the market went down 22%. So by you knowing that certain level that we've lost momentum, you could have saved yourself from 22% of losses, or you could have bought a special of 22% off. Now let me show the example before that. Look how we tracked that. Look how we tracked the momentum loss, and look at what happened after that. All of a sudden, we had the market fall down 40%. So this line is extremely powerful. Look at this, especially in a market that is moving down or up. I'll show you how it looks when it's going up. But down, look how we basically use this line to protect our funds during a really tough market and to give us that indication. And by knowing this, it can save you tons and tons and tons on your portfolio, because you'll know when the weakness is showing. And you could see very clearly how accurate this actually been. Now it's the same in a bull market. In a bull market, you need to know the other line, which is the resistance line, because you want to catch the breakout. And you can see over here, as soon as you catch it, this one would have given you 60% gains. The next one would have also given you 60% gains. You can see how powerful this line actually is. Either at the top or at the bottom, you can see that it basically tracks. All that I can see here is it's tracked all the big moves. As soon as we lost major trends, we saw humongous moves in the markets. Now let me show you the actual strategy on how you actually use this. I'm going to use a 12-hour, which is a medium-term strategy, as my first example, and I'm going to be using the token called BNB. Now I want to show you how this actually works. Now when we are in either sort of market where we are down or we're going up, and I'm going to use going down as an example, that we are tracking to the downwards momentum. The way you actually want to trade this is you need at least 3 touches. Now 3 is my minimum, because you can do it with 2, but 3 is when you really start to get accurate. Now if you can get more than 3, the better. Rather, instead of trying to find many lines with 2 touches, because you could see that so much is happening right now, I can draw 1,000 trend lines. How do I know which one is the right trend line? And it's the one that gives you the most touches. If you can find any that's 3, 4, 5, 6, up to 10, now you know you're starting to track the right one. So what you're looking for is you're looking for a trend where you can get as many touches as possible. Okay? Then what you're doing is you're not rushing. It's a non-guessing strategy, which is great. It's not there to pick the bottom, it's not there to pick the top. You just want to catch it when it changes direction. So what you'll wait for is you'll wait for this to trail down as many touches as it wants, and all of a sudden you'll look at a breakout. As soon as it breaks out is your indication to enter the market. Now, the way I do this is a two-step method. I will buy 50% of the capital that I want on the breakout. And then what happens is it breaks out and it retests. It retests this previous high over here. It retests that trend line. And that is where I'm executing my second half, my other 50% of my capital. Now, what it does for me as well is sometimes you'll get fake outs where it will pop out and then fall back down. As soon as I enter that buy and that trigger zone, it comes with a strategy and a structure, which means as soon as I've executed and I've bought, I have to put a stop loss and have to get ready for where I'm going to take profits. So what I use is if we break out of here, we should never come back in. If we've changed trend, we should change trend and we should start moving in a different direction. We should not come back into this line. Otherwise, it's a fake out. So if that being said, and this breaks out over here, I buy on the break, I buy on the retest, and I put my stop loss under the previous low. This is where I protect myself in this area because I know we should not come back in. Very, very, very important. Then what I do is by the time that this market has come and retest and now starts to make its way up to the upside, what I start to do is I take my support trend line and I put it in place of the trend that we are now starting to move in the other direction. And you can see how we start to move our way up there. Now, what this does for me is it gives me a momentum line. This is how long I'm going to hold the trade for. Okay, so you see how it's not guessing where it's going to go. You're just trading purely on momentum. So that means if this token continues to rally up and rally and then all of a sudden breaks, it's the same method. I will sell 50% on the break and I'll sell 50% on the retest. So once we have broken and we have retested, I'll be out of the market. I'll then be waiting for the next trend for me to catch to get the next breakout. So ideally what it's doing is it's not making you guess where the price is going. You're just tracking what the token is actually doing. So you want to catch it when it breaks a good trend to the downside. You want to be executing and you want to be holding as long as it holds momentum. And as soon as we lose momentum, you will sell out, you will take your profits, and you will then repeat the process. Now, let me show you the power of what this actually does for you on the actual charts and with the live trading. So if we had to look at the last 6 months on BNB, the first thing that I was looking for is trend lines where I have many touches. And you can see here, I got 1, 2, 3, 4 touches. That's great. On the break, I would buy. I would put a stop loss under the previous low. The retest, I would buy my other 50%, and all of a sudden we are on and we start to rally up. I start to make my gains. Then what happens is I have my support trend in play and all of a sudden we lose it at some point. Do you see how it breaks it and retests it? So I would have sold 50% on the break and 50% on the retest. I am out. I've taken my profits and I've made over 40% just on that trade. Then what I would do is I will track the trend going down for my next buy. And you can see here 1, 2, 3, 4 touches. 1, 2, 3, 4 touches, making it a valid trend. And what do? I buy the breakout. It had a quick retest after that. I am in the market, stop loss under the previous low. I put my trend in place and I track the momentum up. All of a sudden later on, so one thing that is important is I do use Wix as to track my trends. And if I am, so you can use Wix or you can use actual bodies. And the only difference there is if I'm using a wick, I'm looking to make sure that the closing candle still stays in my trend. So you could see here that this one had a small little wick out, but I closed inside. And if I'm closing inside, it is still valid that I'm in that trend. And it's the same if you're using the closing candles as well. It's very important on where that candle closes. Sometimes the market will send really big wicks just to stop people out, and you don't want to get caught up in that. So once this was trailing really strong up, here was my true weakness. I had the first closing candle there. I sold other 50% on the retest, and then the same thing happened. Now, if I used this strategy, I would have been 170% up in 6 months over 4 trades. If I just bought the token and I held, I would have been over 16% down just by holding the actual token. So it's crazy to see how powerful this strategy alone is actually, because all that it's doing is not guessing where the market's going. It's just tracking the actual momentum. And that's the true power of it. Now I'm going to show you how this works on larger time frames and shorter time frames. It doesn't matter the time frame you use. As long as you understand the structure, it gives you a proper understanding of where to calculate my risk, when to take profits, and how to snipe those entries.